Hello, folks. Welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 7th. I'm Eric Wilkinson. We are an educational company here at Pro Trader Strategies. So what we like to do is start off with a little economic data, see how that's impacting and what world events, see how that's impacting the overall markets, and ultimately we'll narrow that down to finding option strategies that we can implement into a portfolio based on your own risk parameters though, folks. I don't know what your risk is, so please take that in mind as well. And throughout this video, feel free to comment, folks. I'm going to be keeping my eye over there in the comment section. If you want me to look at a particular stock, ETF, cryptocurrency, throw it over there in that chat window. I'll make sure I'm keeping an eye on that so we're all clear concept as we go along. And hey, throughout this video, smash that like button. You know what it does? It's like throwing a cookie to these little bots in the interweb, and they run off and find a folk just like you to watch this video. So please feed those bots by throwing them the likes, all right? And finally, hit the subscribe button, and there's a little window down there next to it. Sometimes throughout the day, I'm gonna pop in here unannounced and talk about option strategies that I find. So if that little bell's clicked, you guys will get a notification when we're talking about trades off the cuff. All right, so without further ado, let's get on with the economic data. Well, believe it or not, there's not a whole lot going on here in the United States, but we do have something that's a pretty good precursor. And later on today, actually, I think it's later on tomorrow, we get the beige book. Now, that's your heads up that it's a couple of weeks away for the FOMC meeting. That's one of the biggest reports that the FOMC folks are going to be looking at, and they get a revised one. It's called the blue book right beforehand. So to give us a good gauge as to what they're going to be seeing, keep your eye out for that beige book tomorrow. But here in the United States, not like I said, a whole lot of economic data across the pond. We got German zoo economic sentiment slightly lower than expected at 31, expected to be 35. So there's a bit of a dark cloud over the markets, it feels like today across the board. Nobody's happy. Markets are in negative territory, maybe not so much NASDAQ, and we'll talk about that here as we go. But we've got crude oil coming off here as the broader markets just are pretty weak. Now, Dow Jones is trying to hold up these markets, but it's seeing some weakness here too. Right now, we've got the bonds, talking about the beige book, talking about the FOMC. All of those things are going to be driving the bond market. Now, keep in mind when we're looking at bonds that hopefully my pen will work this time. When we're talking about bonds, folks, and what makes this so important, I'm trying to test this to see if I really want to use it. Maybe not. I don't know where my thing's popping up. Maybe if I pull this thing over here. No, it's not very intuitive. Anyway, let's just close that out. We'll move on. All right, so think of it this way, as the bonds start going down, we see the interest rates start to rise. So they are completely inversely correlated. What I was going to show you is a teeter-totter. You can look at it like this. As the interest, or as the bonds start to go down, or actually, if you want to look at it this way, if the bonds start going down, the interest rates go up. So it's a total teeter-totter, completely inversely correlated. Charts. Thank you. I do have it on the, you want to see charts? We got charts. I should be sharing them. There we go. Thank you very much. What do you think about XRP? Well, I'll look at that in a second. Give me a moment. But here we got crude oil breaking below a Fibonacci. Now, something we were talking about with crude oil. Let me go back to that real quick so I can talk about crude oil starting to break down here. On Friday, we saw it last couple of days trying to bump up against this 50-day simple moving average, and we failed. Now, keep in mind, right below that is the point of control. Yeah, we got the charts finally. Right below that is a point of control. Now, that's where the most time and volume has been spent, folks. So when you have a point of control like that, where time and volume has been spent, it has a tendency to draw back down there. If you think about it, when you are long for a nice rally, you're a little angst. You're thinking, I need to get out of these, all right? But when you've sat at a price where everybody has been exchanging hands, you get used to that, and it's complacency, all right? So when a market migrates back down to that place, we usually see it settle down for a little bit. And I'm going to even talk about a trade that I found based on a setup of the market coming right back down to the point of control. I believe it's going to stay at that price for at least a week or so. And if that happens, I can take advantage of an underlying that doesn't move. We just did a webinar on that on Thursday, and I'm going to talk about another trade that I implemented around those guidelines that I set out for you folks in those videos. And this is what I'm talking about with the bond. Should I try and do the screen capture one more time for prosperity? See if maybe if I pull this over there, it's not letting me. Try it. It's not working out very well though, folks. It's not a very good system or very intuitive. Let's see, pointer makes it easy for you. But for some reason, my little screen's not popping up. There's a another screen that's supposed to pop up with this thing. Anyway, sorry. But bonds breaking below this fib here, the 162 handle. I've been expecting it to stay in the 160 handle as I'm expecting interest rates to remain relatively low. This sell-off in the bonds is making interest rates go higher, and I don't think the Fed is going to raise interest rates. I don't even think that they're going to stop the taper. They're not going to start tapering, pulling back on the buying of assets, which is really just buying bonds to hold them up. If they hold the bonds up, what does that do? If that pushes the bonds up, it pushes interest rates lower. And they've been talking about, well, they'll stop some of that buying pressure. I don't think they're going to do that before the end of the year, folks. We've already been seeing some of these manufacturing numbers come in a little bit light, unemployment numbers a little bit light. Yeah, we're seeing some inflation, and that used to be the target for the FOMC, but that's no longer really the thing. We're trying to get employment going. And so if we have employment staying steady and maybe even declining like we saw in the last unemployment number Friday, well, if those start going down, we see inflation rise. That is a very difficult corner for the FOMC to be in. So they don't want to see that really necessarily happen right now. And gold coming off, breaking out of that 1800. I was expecting us to stay in the 1800s and even test the 1900 handle as we're seeing some inflationary pressures and wages not really driving higher. That's a stagflation type environment that should be driving gold higher, folks. And for some reason, we're seeing some real weakness here across the board in the flight to safety trade. And you would think that even with the equity weakness, we would see some strength in these, but we're not today, which is a little bit disconcerting, folks. Full range of Bitcoin here in between these Fibonacci's, the 78 Fibonacci down to the 61 Fibonacci, literally tagging both of those today. So we were up in the 50 handle earlier on today, and now we're in the lower to mid 40s. So just a massive range today, volatility across the board here. A couple of things to talk about, not only in Bitcoin, but we're seeing cryptocurrencies across the board weaken today. Where Ether is down about 14%. You guys heard me talking about, I actually think Ether is going to outpace Bitcoin to the upside. With all of the ETNs, all of these JPEG art that people are buying, they're using Ether. So that is a driving demand factor for Ether. I think Ether could jump up to about 20,000 relatively quickly. Bitcoin, yeah, it's going to stick around because it's been accepted by several major corporations recently. I think that it has created a situation where it's going to stick around for quite some time. But folks, I think that Ether, if you're looking for bang for your buck for the upside, Ether is the one to do it. Stay away from Doge, folks. Yes, an ETN is something that is, it's a one-off, where Dogecoin is just, they can print as many as they want. They're never going to stop printing those. It went below 25 cents. I think that Dogecoin is pretty much done. Folks are going after it for the volatility. Well, there's volatility in there because nobody really has an idea as to what it's worth. I don't think it's going to go anywhere. It's more along the lines of like a pet rock. Whereas at least the Ether and Bitcoin have some kind of underlying value there. So Bitcoin, Ether, they're showing some weakness today, down 10% here earlier on in Bitcoin. It's only off about 5 now. Ether was down about 14%. So I'm guessing it's probably only down about 10% now at this point. I don't have a chart on it, but looks like the cryptos are coming back a little bit. Now we were seeing some spikes here in VIX. Why? Because we were seeing weakness across the board in equities, people going out there and buying puts. That drives volatility higher. And at all-time highs, that's the time to be thinking about adding puts. If you guys have looked at my portfolio or watch these daily market commentaries, you can see I am chock full of long puts at these all-time highs. Why? Because volatility was lower when I was adding those, expecting a pullback here and volatility to expand. That would help out a long put strategy quite a bit. You get the directionality in your favor, and volatility spiking is what we would look for in that type of trade. Dow Jones Industrial Average off about 200 points, but folks, it's not even down 1% right now. It's above the 50-day simple moving average. Now, one thing to note with the 50-day simple moving average, I just got done with my soapbox about the point of control and how that's a magnet. Well, when you get the 50-day simple moving average lining up right around with that, we could see the 50-day simple moving average still acting as a support and resistance. Support when we're above it, resistance when we're below it. But lining up with that point of control, it might get a little bit more messy where it's not really acting like we would normally see on a support where it'll bounce up and away. It might peel through it for a moment or two just because those points of controls and the moving averages are lining up quite in line with one another. Now, E-mini S&Ps are off on the day. You can see the Dow Jones was the leader of the charge to the downside, while it's only down 0.5%, where we're seeing E-mini S&Ps just off a little bit. You can see where the weakness came in, pretty much in line with when we started getting the economic data across the pond, just the German economic sentiment, those coming out. Also, Apple coming out with their internal pay equity, or the internal equality of their pay for their employees. Some employees trying to figure that all out. They're coming out and kind of knuckling that under. Also, WhatsApp coming out, and they're talking about how encrypted WhatsApp is, and now all of a sudden there's a data leak. Well, it seems like a lot of these encrypted things are, they're secure until they don't want them to be secure, and then all of a sudden we can break into these things relatively easy. Well, overall market's really shedding on pretty much the tech side of this to the downside. Now, this is what I was talking about. When we are at a point of control here, what we're looking at is the market has seen this price trade back and forth. And you can see all the way up to here is another volume node. Well, as we start peeling back and forth, the idea is you'll fill in these smaller nodes and create a very large one. All right. So as this magnet keeps attracting, we pull away from it, pull back, we'll fill in some of those lower volume nodes, like right in here around 55, and create a nice large node here. Now, we had some volatility really spiking earlier this morning, and it looks like it's really coming off as of now, because Intel had implied volatility at around 100%. We were looking at around 35, 36 something, or actually it might have even been 40. I probably should have taken a screenshot of that. It's changed so quickly. I'm trying to scramble back to my platform to see if anything's changed there. But anyway, wanted to take advantage of some high implied volatility a little bit earlier today and went into the Intel because I had that high implied volatility. I know those prices are pretty frothy, right? Well, we're at that point of control. When volatility spikes, it's expecting a larger outpaced move. Well, when I get that volatility spiking and we're right at that point of control, my mind is saying, hey, volatility is well overstating this move. We're going to see some trading right here at around 54 because we came back to this point of control. You can see it settled down right around this. I wouldn't say that this Fibonacci, again, kind of like that 50-day simple moving average here, or this fib on the 61, folks, it's not going to act as much of a support and resistance. You can see it's a little bit sloppy throughout here. People might have been clamoring, hey, we got above that, or it's acting as a support and resistance, but they don't have this point of control right next to it telling them that, hey, this is a magnet. Of course it's bouncing up and above, above and below, and really not acting as a support and resistance. That is because of this point of control. But with that said, I went into the October and sold the 55 calls and puts. That creates the straddle there, and I collected $3.26 for this trade. That makes my break even at 58 because you add that credit to the calls and subtract it from the put. So around 51.75 and 58.25 to the upside. Now, with that added in there, you can see that that puts me quite nicely inside of this value area. Yeah, there's a support just slightly outside of it and a resistance just slightly outside of that break even area. But folks, that is a lot of wiggle room to be wrong. Because of that volatility expansion, I was able to collect a nice credit for this. I wanted to take advantage of that before it really started coming out. This position is already starting to work out because of that volatility coming out, and we haven't gone anywhere. The theta hasn't ramped up. Oh, and the reason why I go into that October is to take advantage of that theta, right? We know that the closer and closer we get to expiration, theta starts increasing. I want to take advantage of that when I've sold something, right? I want to sell it high, buy it low. So the reason why I sold it was because of the volatility. And when I'm selling, I immediately want to have something in my back pocket to help me out. Well, that's theta, the thief in the night. So I want to get closer to expiration to take advantage of that ramp up in the theta. All right. So all of those things, volatility coming out, underlying stays right here. I'll be trying to get in and out of this trade for around 50% of max profit. You guys know I don't like to try and ride anything out into the sunset. I would like to get in and out of these quickly and move on with my life. Find something else to go on. All right. So that's about it. Oh, wait, one other thing I wanted to talk about. When Pfizer was not the one I wanted to talk about. I wanted to show you a chart of Apple because they are making all-time highs here. Some of the things that they were talking about was the internal pay inequality, trying to figure all of that out. That was showing a little bit of weakness. I think that's behind us now. And a couple of other, their sales are doing very well. As a matter of fact, folks are going out there and buying the new 12s, where I was saying I didn't think that that was necessarily going to happen. People are consistently trying to get the best tech out of Apple. I thought at some point we were going to see some of these phones slow down, but it's not really happening as of right now. And when I'm trying to cover those puts still, remember, if you guys remember, I've ridden this trade out a little bit too long on the long calls, expecting that Caesars, Wynn, MGM, these casinos were going to do very well. They've already shown that they've done very well through the pandemic, despite the fact that occupancy is down 50%. Their profits are at all-time highs because they've streamlined their process. They've gotten rid of a lot of the fat. So we can assume that when they come back to the casinos, when the folks like us come back and start filling up these casinos and they're at 80, 90% occupancy, well, those profit margins are going to absolutely be astronomical because of them going through this phase where they had been forced to streamline the process to get back to profitability. They will carry those processes through. All right. So that's about it. When I'm trying to get out of those short puts that I added to my long calls, I remember I was long the September 135 calls in there. Well, those have clearly not worked out. So as the market started selling off, we found a little bit of a bottom here, had some volatility spiking. What do? Take advantage of that volatility going in, and I sold some puts down there at the 95 level. I would have been happy to buy when below 100. Okay. So having said that, that's why I ended up selling those puts against the long calls. I was more than willing to have that assigned to me and be long when I would just go into the covered call strategy that we've done for several of those other ones when we get put to stock. Lower overall cost basis, stay mechanical. That's what we try to do here. So if you guys have taken anything away, make sure before you go, you feed those bots, smashing that like button. Let those bots go out and find somebody like you to come watch this video as well. Subscribe if you haven't already. And if you want to participate when I pop in here unannounced, click on that little bell right next to it. That way, if I pop in here later on this afternoon with a trade, I will talk about that pretty much live. And finally, don't forget to comment throughout. I'll circle back around. Kimmel wanted to look at XRP. Let's check that out before we go. But make sure you guys comment. I'll make sure I come back out. What was your, I thought it was XRP. There's no stock. XRT, is that what you were thinking? Maybe? All right, I'm going to go with the retail sector here. Now, it's something I've been talking about. The retail has done very well. And as a matter of fact, I've been looking at TJX and a couple of those discounted because I believe that folks, when we were at home during the pandemic, folks were buying a lot. And when they buy 2 or 3 of the same pair of pants for different sizes, when those get sent back, a lot of times those go to TJX. All right. So I think that they're going to see a lot of influx of inventory, and that will filter through to some sales. So with that said, I'm a little bit iffy on the retail sector. I think a lot of those folks have seen some of their margins get jumped or pumped up because of this multiple buying and or exchanges. So I think that that will maybe hurt these guys going forward as some of those returns start coming back in. So I am a little bit more bearish in XRT than I would be in the past. Recently, I've been jumping on Lulu and a couple of other ones, but right now I'm kind of staying away from the retail sector. Back to school's already done. We've already seen what's gone on there. So I am going to stay clear as of right now. All right, that's all I got, folks. Stick around to comment if you want. I'll come back around, and don't forget to feed those bots. All right, if you can't take that, take it easy.